Hey guys, Nicole here with Momentum Accounting. In this video, I am going to be going through a case study and show you how we increase cash for our client by over $1 million. So this was a 40-year-old family-owned business, security staffing company in San Francisco. They had good revenue, $10 million. They were $10 million top line revenue business, but they struggled with cash flow. And a lot of the cash flow issues were a result of not using the right technology or having the right systems in place in their accounting function. And so they were working with a fractional CFO, and he actually he was the one that I had a relationship and knew, and so he referred us in to help them get these things under control. So when we started working with them, they had $800,000 in accounts receivable. On average, it took them 30 days to get paid by their clients, and their employees were paid weekly. So if you think about that from a cash conversion cycle, the employees have been paid 4 times before my client got paid. And so what that meant was that they had this huge line of credit to be able to fund those expenses in order to generate that revenue. They also had the CFO, the fractional CFO, who was managing cash on the back end, just making sure that they could even make payroll, kind of managing the outflow of payment to vendors, et cetera. And then they also had an accounts receivable clerk who was full-time in-house, and she basically spent all of her time dealing with invoicing and collections. And so she was manually creating 150 invoices per month and emailing those out, sending those out every week. And they're on QuickBooks Desktop. And so there's just like a lack of transparency in general, which, is a result of a desktop software. And also it was very chaotic. You had customers paying by check, by wire, by ACH, a few by credit card. And so, again, it was just a very time intensive full-time job. And because they had cash flow issues, the owners were not able to take out distributions. And so they were paying themselves a salary, a very modest salary that they probably could have gone and made, probably wasn't worth running a $10 million business. They could have went out and got a salary at a company. So anyway, what we ended up doing was we came on, we migrated their accounting from QuickBooks Desktop to Xero, which is a cloud-based accounting software. And if you've ever heard of QuickBooks Online, it's a direct competitor to QuickBooks Online. And we helped them implement an ACH payment processor. And so historically, the AR clerk would send out invoices, and then you just kind of sit around and hope that the client pays you on time, and then spend a bunch of time calling them to chase down payment. And so with implementing the payment processor, what we did was we had the operations manager go out to every single one of their customers and have them sign an ACH authorization form, which basically means that, hey, when a new client signs on, they sign an ACH authorization form, which allows us to then pull the money from the client's bank account. Okay, so that gives us much more control. Would give us total control, because now what happens is on the first of every month, all invoices are created. Actually, sorry, it's weekly. So at the beginning of every week, all the invoices are created and sent out. And so the cash is in the bank 7 days after that. So every week they're getting paid. I think this is a typo here. So this is the first of each month. It's actually the first of each week. And so basically the idea is that when you're getting paid aligns with when you're paying out. You want to get paid before you pay your employees or around the same time. So there's not this 30-day gap of you having to fund those, the payroll costs. So what impact did that have? Well, here are the results. So we were able to actually eliminate that AR collection position because it just wasn't an issue anymore. And once a new client onboarded, everything was automated. The CFO reduced their hours, his hours 12 hours per month managing cash. So he was billing at a higher hourly rate, and so no longer needed to do that because they didn't have cash flow issues anymore. The line of credit was paid off, so that was $48,000 in annual interest. Credit card fees eliminated. So, like I said, they did have some customers using credit card processor, which is usually around 3%. And then we added the ACH fee. So that $6,000 was basically for all $10 million in revenue. So basically pennies on the dollar. ACH is really cheap compared to credit card fees. And then the outstanding AR, which is the best part of all this, right? That $800,000 that was sitting in their customer's bank account we got that in our client's bank account. And so the total increase in cash flow for this business was $1 million. And so what was the impact of that $1 million? Well, they were able to go buy a condo in Hawaii. They were actually able to take distributions. And so they set themselves up basically because they knew that they wanted to retire there. And then ultimately they did sell their business last year. So for $3 million. So basically it went from the business being worth nothing to a $3 million business over the course of the 3 years that we worked with them. And so some people might argue, well, they would have received that $800,000 as part of the sales price when they sold the business. Yeah, but would you rather have $800,000 today or $800,000 3 years from now? And so because we were able to get that $800,000 in their bank account 3 years ago, that meant that they were able to invest in an appreciating asset. And they were also able to invest in marketing, which ended up increasing the value of their company significantly because there was a multiple on that revenue. So my point with all of this is that the accounting function is hugely, hugely important for flow, and technology has changed. You should be using the best technology. You should be pulling money from your company or from your clients' bank accounts, not waiting to get paid because that's just an old way of doing things. So thank you for listening. If you want to find out more about Momentum Accounting, you can definitely go to our website at momentumaccounting.com or find me on LinkedIn. And I look forward to seeing you at the next video.